to talk fundamentals with Alexis soon. Obviously, one of the things that drives the currency market is fundamental outlooks. Our expert is Alexis. Alexis, what can you tell us about fundamentals in the week ahead?
Well, before we go into the fundamentals, I just would like to say my mom used to cut my hair. So, if an outside option is not available, Julian, maybe your wife could do it.
Not only would his wife love to, but both the boys would love to cut his hair as well. And it'd be fun to see the outcome. It'd be zigzag, right? They'd have a great time, wouldn't they?
Yeah. All right. Okay. I got an article to share with everybody, and this is one of the article. And let's talk the US dollar. All right. So I'm just going to talk a little bit about signorage. I'm not sure if that's how you pronounce it. How does the mint profit, right? How does the mint make money? So basically, what happens is the US Mint is like a factory. It buys metal, stamps it into coins, and then sells those coins to the Federal Reserve at face value. So this profit that the mint make is called signorage, and it goes to the person known in the middle, the person in charge. And currently, this is Janet Yellen as America's current signer. So when the Congress runs on a deficit, right, she has to figure out how to produce new money, to produce new dollars, to kind of make it profitable for both the mint, i.e. the Fed, etc. Right. So the question next is, will the US still be continuing to print USD, or what is the alternative? The alternative will be actually treasuries. So treasuries are like a kind of dollar because they trade like money. And a lot of focus is now currently on the bond market, the treasuries, as Julian shared earlier. So the question is, with the will the US actually raise interest rates? Will this issue, right, that is difficult for the US to kind of print money right now, does this mean that they will slowly, I wouldn't say reduce the supply of USD, but stop printing as much? Will that make the supply of USD a little bit more desirable in terms of scarcity? So I think that at the end of the day, the treasury isn't just a token. It's like a promise of American faith and credit, right? Because it's sold in markets. It's actually tradable. So the question is, if the treasuries are like an asset, right? What is Janet Yellen's next step, right? How do they move forward if they need to kind of find a way to kind of print more money and also keep the value of the treasuries in check? Because I think the next thing is, money is actually flowing out of standard. I think that it's kind of flowing away from gold. It's kind of flowing away from traditional assets like treasuries to go into Bitcoin, right? And I think there are a couple of articles that came up online that talk about this, about how hedge fund managers, they are exploring Bitcoin, they're looking at Bitcoin. Whether or not they're buying, it's a big question mark. But how does this asset class start to attract more attention, which also ties into, what do we need to buy Bitcoin is still the US dollar. So a very clear, I think there's going to be a clear shift in asset desirability. We do have the old school traders, probably the fundamental traders, the older traders that will look still at gold and treasuries, but they're also the new wave of younger traders who are more in tune with the crypto markets, the NFTs, and they actually look at these like assets, especially as the governments and countries of I think different governments are slowly coming together to kind of start regulating, start kind of having eyes on Bitcoin. So the question is, how long will this shift last? And, how do we then trade this so-called transition in asset class perception, right? And when I talk about asset class perception, I think I'm just going to segue into this article that I'm going to share with you. And something interesting that popped up last week, it's currency manipulation. So why it interests me is really, really simple. Again, perception, right? So the perception of currency manipulation is really simple. I'm just going to show this screen where it says very nicely that Singapore, 20.3% of foreign exchange intervention. So I think it's not a strange thing. I have mentioned it a couple of times that the MAS, the Monetary Authority of Singapore, does regulate its currencies in this format. So if we have a kind of perceived, if number one, interest rates do go up for the Fed, if treasuries are kind of going down in appeal for people who are buying treasuries, then my question is, how do we then trade the USD? And among all the US dollars, I'm coming back to home in Singapore, how do I then take advantage of where price is at the Singapore dollar? So what interests me is really simple. This is a weekly chart, and I have the vertical lines, which is end of the year, right? So my question then is, because USD Singapore dollar trades in a very tight range. And what happens is it ranges and then it moves, it ranges and it moves. So I'm trying to identify whether or not we are entering into Q4 of 2021, going into Q1 of 2022. Will we then see a breakout of this range? So we have 2010, we have a move this way, we have end of the year, and we have somewhat a little bit of a move. We have some kind of move, be it one directional or be it a reversal, depending on price. So we do have these moves that we'll look out for. And what I am looking for is this moves, right? Because this is a little bit more, I would say it's a bit clearer in terms of end of the year, it does something. So I'm waiting for positions like this. And if you can see over the years, right, the trading range for dollar Sing has tightened, right? You can see that it's tightened significantly over the years, minus this is the COVID year. And back in 2021, 2022, you can see the dollar Sing barely moved anywhere. So the question then would be, if it barely moved anywhere, how then do we take advantage of it and pick a direction? If I go all the way to the daily time frame, and let me erase all the scribbles out, right? And then what I'm looking for on the dollar Sing is just simply the levels, right? So we have the 134 level, we have the 132 level, and somewhere back here we have the 131 level. We have a high level about 137, which was the highest it ever reached this year. And of course, all the way from 2020, we have the 140 level area. So if we look at directional, and if I say again, if interest rates go up, I think the room for the upside is a lot more than the room for the downside. The thing now is, how do we trade it? How do I find entries into it? So I think a lot of patience is needed for trading the US dollars. And I'm still long-term a bit more bullish on the US dollars because of the levels as well. So once the interest rates have been decided, once they have decided to pop up the interest rates, then I think those are really good times for buying opportunities among the various USD, just based on the levels. And yeah, focusing mainly on dollar Sing because we're entering Q4 and it is at a 134 level right now. So I'm just wondering whether we could take it on the shorter time frames up to the 137. And that's all from me, Paul.
Cheers, Alexis. Thank you very much. Always great to get your view on the markets and what's going on. I do like that Sing dollar bounce intervention, and that is very likely, I would have thought, over a period.